Okay, hope everybody had a nice weekend. Today is November 9th, 2014. Let's take a look at the market and some stock before the market resume trading tomorrow. First of all, let's take a look at the Dow Jones Industrial. You can see that the Dow Jones Industrial has uh, been had 3 consecutive up week, and also 4 consecutive up day last week, and also we're closed out with a new all-time high last Friday. Just kind of eke it out from the previous day. When we see a market that is entering the fourth week of possible 4 consecutive week of up, or even getting to the fifth and that sort of thing. So once we surpass 3 week, we got to be a little bit more cautious and be defensive, because looking at a lot of the recent history, you can see that once we get into the fourth week of consecutive up week, or that kind of stuff, then we could see these 1 or 2 day reversal pullback, and depending on the state of the market or is anything driving it, and the reversal could be a little bit more deeper than 1 or 2 days. So we just have to be a little bit defensive here. And also same thing with the S&P 500. You can see that S&P 500 also closed up with a new all-time high, and it's basically just closed up like 71 cents above the previous all-time high, which is on Thursday it closed at 2031.21, and then on Friday it closed at 2031.92. So that's basically 71 cents above the previous all-time high. And, and again, like I said, it's been 3 consecutive up week. And also on the Nasdaq 100, the Nasdaq 100 also closed out the week on a little positive note, even though on Friday it's kind of closed down slightly. And we see that sort of putting out a little bit of an NR7. So this little candle here, if you take a look at it on the candle chart, you can see that it could set up for either a reverse down, or it could set up for a little bit of a spike up. So anything could happen, but again, since it's a little bit overextended, we have to be a little bit defensive. And similarly on the Russell 2000 been a little bit stronger recently, kind of regained a lot of strength, but don't let that deceive you, because it's still pretty far away from the July high here. And in addition to that, we're essentially still working on this little bit of a declining channel here, right? This price channel. So until we see that, if we could take out some higher high and then put in a higher lows kind of zigzag, so this basically is still not out of the wood yet, right, on the Russell 2000, just because it seems like the small cap is regaining some strength. Doesn't mean that the market is back to its uptrend that we been seeing since March 2009. Okay, so that's the quick look of the market. And let's take a look at the some of the stock. And the first one I want to take a look at is Apple. And you can see Apple is still kind of trending within this price channel that I have here. And we're essentially looking at the the 110 level because of this. Right? And in addition to that, kind of came up about this price channel when it got to that 110. But if you recall, we're also looking at this particular Fibonacci retracement, right? Okay, on the swing here, and you can see this 127 extension is essentially sitting at that 110 level, and that's why I got that 110 to basically monitoring. In addition to remember I was talking about the possible confluence between the upper trend line and this price channel and the 127, but it seems like Apple just kind of got ahead of itself a little bit, and came up and attacked the 110 a little bit earlier than kind of anticipated based on the charting pattern. But again, if we take a look at the next possible level, if it breaks through this 110, okay, then we're basically looking at somewhere around this 113, 114 area, up at this 141 extension. Okay, so right now we're basically kind of monitoring Apple. It seems to be a little bit extended, just like the market, and I wouldn't be surprised to see it maybe come pull back a little bit, because we also notice that there's a little bit of a coiling effect here, right? So these inside candle, And if we could take out this pivot high here, then maybe you could come up and try to, test this 110 again. But if we dip below this particular low, somewhere around this 108, then maybe it could come back down, tag this, 104.50 or this, 102.70. Essentially, come back down and possibly retest this, this 103 area here, these pivot level here. Okay, so that's one possibility. So just kind of keep an eye on that. Then on Netflix, Netflix ever since this, check this out, since we, have this earning gap here, kind of, bounce off with this level, near these, these pivot down here at this 330 area, and came back up to this 391. Actually, it came up to this 395, almost to 396, then it pulled back again. Okay, so right now, I'm basically looking for this thing to break below this level here, somewhere around this 372. And if we break below this 372, then maybe it will come back down and we test this 330 and possibly even come back down to this 314 to 15 area. Now, if it come up and take out this 395 or so, then maybe it could work itself up and try to, try to fill this particular, the earning gap and probably tag this 421. Okay, as resistant here. Okay, then again, there's this 429, which is near the gap here, right? The 38.2 based on this, this particular Fibonacci retracement. But again, I'm basically looking for a H pattern breakdown also. Okay, so it could take it down to this, 386, 387 area. Okay. If it, if it break this H pattern here, then probably look at this, come down to this 314, and essentially, this these low pivot low here, and if break that 314, I'm looking at this 386. So that's Netflix. If it again, break about this 395, then maybe it could work itself up and try to fill this gap, and maybe tag this 200-day moving average for those people that's looking at the 200-day moving average. And here's the Amazon. Again, Amazon, it seems to be holding about this level and ready to break down. Then it kind of, kind of went back up a little bit. So this too, I'm looking at this, big H pattern breakdown. So I'm looking at that 250. If you get below this 284, 285 area, right? Because if we take a look at this, let me zoom this in. Okay, you see, although we got a little doji here and then try to come back up, but you see that, when it came down, bounced up to 38.2, came down, bounced back up to 350, at that 50% retracement. And the last time that it's trying to bounce, it can't even get back up to the 618. So I got a little bit about this 78.6. So essentially, I'm looking at this Amazon to continue, to work itself down and break this 284, 285, and try to come back and test these level at the 250 area. And on Google, at one time we were looking at this particular level, this 511, 510 for support here, right? So it came and held above that level and worked itself back up, and you can see that it's also, trying to make its way back down again. Now, unless it could take out, this level here, 575, and if it really could come back and take out this 609, 610, then that would be a very bullish pattern, right? Because essentially it had developed a, big, sort of a W pattern, okay, or some sort of like a double bottom pattern, although it's not at the bottom of this, this trend here, but essentially like a big W, then that would be a very bullish development, in terms of, chart pattern. But right now, I'm essentially, keeping an eye on this thing. Maybe it come back down, break this level here, this, 520, and work itself down at this 510, 511, and come and fill this gap here, which is somewhere around, 448. Okay, because you look at this, the 127 extension is close to this pivot level here on this gap, this 483, 484 area. Okay. And on Facebook, Facebook is still having a little bit difficulty of coming back at that 76 level that I've been talking about. And essentially that 76 level is the previous earning gap opening price, right? And you see a lot of times kind of test this, the that price level, near that price level. And right now it's trying to get back up there. It seems to have a little bit of a difficulty. And also we got this trend line here, sort of hugging this trend line. And if it break, break down on this trend line, then I'm essentially looking for it to come back and retest this, this little gap here, right? This little pivot. Okay? That's somewhere around this 71 level here. And if we break that, then I'd be looking at this, the possibility to come back down and, test this 68 area. Okay, these pivot level here. And then on Twitter, Twitter is basically still looking for this thing to try to get back about the 43 after the earning gap here. Doesn't seem like it will be able to do that. Kind of floating and drifting down to this 38 level here. So it seems like it's trying to come down and fill this gap. And if it does that, then it can hold that support. And we're looking at this thing to, essentially come back down to this area somewhere around this 35. And who knows, it might even come back down and retest that, that level near that 30 and 29 area. Okay. And then also another one is the Tesla. Tesla also reported earning, and it's also trying to get back up about this 246, 247 level, and maybe try to come up and fill this gap. But again, I'm basically looking at this thing for a a H breakdown as well. Okay, and maybe it get back down to this level here, the 201, this 127 extension. Okay, and then there's the 161. Okay, somewhere around this 175 and 176. Okay, so basically this pivot low here. Okay, now if we could get back up here, above that 247, then maybe it will come up to this 255 and fill this gap. And so, but right now, essentially, it's we're looking at for this thing to come down, essentially break this level here and work itself down to this level. Okay. There's some intermediate level, right? And then the last one is LinkedIn. LinkedIn got a little earning pop, and then all of a sudden it's kind of sold off. Got a little bit, couple inside bar here, and essentially kind of keeping an eye on this level here. If it break below this particular pivot, look for this gap to get filled, and then possibly come down to this area here, somewhere around this 186, 187 area, to maybe look for support, and then possibly 175. If it could take back up, this little pivot, maybe it could come back and try to retest some of these level here. So those are the some of the possibility. So hopefully, you had a good weekend, and it's getting ready to go back and do some trading next week. But again, the market is a little overextended. Be a little bit careful. Anything could happen because I think there's a lot of complacency in the market here, and that's not a good thing because a lot of time people get caught on that because the market usually do things that is least expected, and I think right now a lot of people are still expecting the market to make this end of the year run, because you hear a lot of people talking about the best month of the year is is back here at the well, some of the best month of the year is back in November, December. So just be careful and good luck.